Congratulations, you finally got that $10,000 saved up. It is invested, but how are we going to turn this into $1 million? That's exactly what we're going to be looking at today. 7 steps to grow your $10,000 investment into the $1 million investment. Now, of course, this mathematically has to do with investing, and investing is a virtue. It takes money to grow the money you have. When you're trying to grow wealth, especially looking at $1 million or more, you can't take advantage of putting the money away and really forgetting about it. And it is going to be imperative that you do just that, because there are some really good money moves that you can make. So investing $10,000, but nothing else at 10% for 25 years. So when we think about this, you're talking 2.5 decades, 25 years investing that $10,000. First of all, most people are not going to do this. And starting off with a pretty good nest egg, putting in something like the S&P 500, which yields about a 10% return, even if you put it and leave it in there for 10 years, you'll fall short. That's right. You'll only be at $108,000 in 20 years, which means we're going to have to set this up. We're going to have to really put it in there for a different time frame. $10,000, 10% return, 25 years is not going to cut it. Now, if we take that same $10,000 and we invested at a 20% return for 25 years, now we're a lot closer. But guess what? It is near impossible to get that 20% return. Even if we look at some of the most famous investors in the world, like Warren Buffett, since the inception of Berkshire Hathaway, has yielded about 19.8%, still under the 20% that we're looking for, that we would need to turn that $10,000 into that $1 million within that 25-year period. Now, of course, if you think about it, theoretically, if you could get that 20% return, this would turn it into 953K. So just being a little bit short. But let's get into how we're going to turn this into, again, that $1 million. So thinking of our same $10,000, adding in another $1,000 on a monthly basis, 10%, 25 years. So again, using the same math equation. So can you reasonably reach that $1 million mark? Yes, with the initial investment of $1,000, $10,000, $1,000 a month, 10% return, 25 years, that puts you at $1.2 million with compounding interest. So we are there. So looking at $10,000 plus $1,000 a month, which we know $12,000 a year, 10% return. So if you're putting this into the S&P 500, you would get there and you would hit this $1 million goal within that 25 years. But how else can we do it? Looking at that $10,000 plus $1,500. So now instead of just investing that $1,000 a month, we're stepping it up to $1,500, same 10% return, but now shortening the time frame. So this, we're putting that time frame to 20 years. So with a $500 initial or additional investment on a monthly basis, we are cutting 5 years off the back end of this, meaning the compounding effect is going to work really well. And of course, coming up and budgeting everyday expenses with you, your partner, especially if you have dual income, chances are you can come up with a little bit more than save kind of on a monthly basis. Now that's right. This would put you a $10,000 initial investment, 10% return, which is feasible. 20 years would put you at $1.1 million in the retirement account in just 20 years. So think about that for a minute. When you start looking big picture, majority of people really start investing at the age of 35 is when they seem and really get invested and get serious about investing. 35 to 40 is really the time frame, including myself, where I got really serious about investing, putting a lot more money in there, and of course, starting to really get that snowball effect. So if I had $10,000 to put in at age 35, putting in $1,500 a month at that 10% return for 20 years would give me the 1.1 million. And in 20 years, starting at 35, I would only be 55 with $1.1 million in there. Kind of impressive to think. But how and what if you had a shorter time frame? What would it look like if you only had 15 years? Again, starting with that initial $10,000, this would require you to put $2,550 at that 10% return for 15 years. And this, of course, would get you just a squeak over $1 million. So pretty much $1 million. And this, of course, is putting it into just the S&P 500, which is an index fund, which is what I personally invest in, and I have for an incredible amount of time for the VOO. So again, you're having that same initial $10,000, adding that $2,550 per month with a 10% return, which is the average of the S&P 15 years, instead of the 20, instead of that 25, and you can kind of see where this is going. There is a multitude of ways that you can reach this $1 million mark, because then when we start thinking, let's say not even getting that 10% return, so the investments you're investing in not really as predominant. So taking that same $10,000, investing 1,100 a month, 8% for 25 years. So we're no longer getting that 10%, but we're getting that 8% for 25 years. This is still going to get you to that $1 million mark. And of course, this is with the additional contributions. If you're looking at a shorter runway, shorter time frame, looking at that 20 years at that 8%, now you're up to $1,800 a month that you have to put into that account, in addition to starting with that 10,000. But again, when you think about that, when you think about the return, 2% return makes a very, very big difference when you're starting to compound that annual return over an extended amount of time. And you can see exactly, again, where we're going with this. When you think of your 401k, when you think of your investment accounts, when you think of your retirement accounts, you have to know exactly what they're returning. You have to pay attention to this. For a majority of people that are in target date funds, they're underperforming or really very poorly, honestly, to put it, underperforming the S&P 500. So depending on what the portfolio looks like, your money might be a lot better invested into something like the S&P, the index funds, versus going into a 401k. And also pay attention to what percentage they're charging you when it comes to investing itself. Now we get into the last one, guys, which is investing $10,000. You have to add $3,000 a month for that 8% return. And with a guideline of 15 years or spending it over 15 years, this would still put you at that $1 million mark. But of course, this is depending. So thinking of the first three scenarios, we did at a 10% return. The second scenarios, we did at an 8% return. You're talking hundreds of dollars on a monthly basis for an extended amount of time that you have to invest in here to make sure that you're hitting that return. So let's say, for instance, you only had 10 years. You're 55 now. You're really hard. You want to go at this with really fire. You want to go in and you want to do a 10-year return, $10,000 again, your initial investment, $5,100 a month at that 10% return for 10 years would still cross and break that threshold of $1 million. So depending exactly how much and how aggressive you want to get at this point in life, you can get $1 million, and there are a multitude of ways to get there. So bottom line, guys, when you're trying to hit that $1 million milestone, really choosing your own adventure, putting $10,000 away for that 25 years, 20 years, you're never going to make it. It is about the contributions. Now, of course, it's not yourself, and you have to think about this big picture, where if you're putting an extra $1,000 away into, let's say, your retirement account every month, so you're looking at $500 a paycheck, but you also have to take in a factor of the employee match if they're doing it. So getting to that $500 a month or $500 a paycheck, $1,000 a month might look a little bit different. And of course, if you're like me, get paid bi-weekly, you get 26 pay periods. So there are 2 months that you actually have an extra paycheck, meaning if you're trying to get to 500, it's more like probably 370, 380 if you average it out. So it is feasible to put away, that $1,000 a month. If you look at it, you add in the company match, you add in anything else. And of course, when you start extending this across an expended amount of time, when you start looking at getting raises, promotions, increasing your salary, having a side hustle, there is a multitude of ways to ensure that you do hit that $1 million mark. All right, guys, so that is going to do it for today's video. Let me know in the comments what you guys think. And as always, thank you guys for watching.